Well, if you're watching this, you're probably already aware that in the afternoon on Wednesday, a week from Liberation Day and Trump's big Liberation Day ceremony in the Rose Garden, he came out with a Truth Social post that said, based on the lack of respect that China has shown to the world's markets, I am hereby raising the tariff charged to China by the United States to 125%, effective immediately. He also went on to say, and this was the big story coming out of all of it, not that there isn't anything huge about the 125% tariff, it is significant, but he also said, conversely, and based on the fact that more than 75 countries have called representatives of the United States, including the Departments of Commerce, Treasury, and the USTR, to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs. He said, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. So, what that means is the 10% tariff is still in effect. The 10% global tariff is still in effect, but those sort of seemingly arbitrary, random numbers that were rolled out on the poster boards during the Liberation Day ceremony that people had a hard time kind of making sense of, and ultimately landed on what they believed the formula was when going into all of that. But those sort of random, really high numbers, those numbers on the penguins, those had been taken back as of yesterday. Again, that came after days of the Trump administration saying, as we talked about on the show this week, saying both these are these we are not moving. These are serious numbers, but also give us a call. Besson is a guy who has been praised by the likes of Jamie Dimon of J.P. Morgan. Reports are coming from the Wall Street Journal and the New York Times. Behind the scenes, reports from behind the scenes, claiming from sources that Besson was the steady hand who had counseled Trump to do something along the lines of what Bill Ackman had suggested, that 90-day pause, and it's ultimately what we saw come to fruition. So here's Scott Bessent saying that what happened yesterday was the plan all
And
along.
all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. And that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors, and we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well.
What's your message?
So this brings us to two questions as I see it. First of all, did Donald Trump blink or did he win? So question number one, was this the art of the deal or art of losing the deal? Now, question number two is, did it work or did it not work? So first question is, did Trump end up with the upper hand or did he lose these negotiations? And the second question is, was he successful at accomplishing what he set out to accomplish, his stated ambitions? Was it good or was it not? Have you noticed prices creeping up? I know you've noticed prices creeping up. Groceries, gas, everything's costing more. Tariffs are kicking in, markets are all over the place, and people are wondering, is your retirement built to handle this? Well, that's exactly why we've partnered with Augusta Precious Metals, because when the economy shifts, smart investors look for ways to protect what they've built, and historically gold has done just that, holding its value through inflation, recessions, and even financial crises. A gold IRA lets you own real physical gold inside your retirement account. More investors, especially those with at least $50,000 in retirement savings, are turning to this as a way to hedge against uncertainty. If you're curious about how it works, Augusta Precious Metals put together a free guide that breaks it all down: how gold IRAs work, why they're in demand, and whether they make sense for you. No cost, no catch, just information you can use. Click the link in the description and grab your copy today. So let's start with the first question. I think this depends very, very heavily on whether those initial rates were ever serious. From my perspective, they very clearly were not. The White House did not seem to put much effort into coming up with those rates. I think they were likely meant to shock other countries into negotiations. Bessent himself told Caitlin Huey Burns of CBS the other day, quote, "They are negotiable, but not a negotiating tactic. That is an amazing quote. They are negotiable, but not a negotiating tactic. So, what he was trying to do is walk that very fine line in this quote between not undermining the president's poker face, which is that we are deadly serious, we will absolutely implement these tariffs, and if you give us a call, we might be open to making a deal. So, it was his way of saying that the administration will implement them, intends to implement them, and will do it, but is also seeking better deals through these negotiations. And we saw this kind of go back and forth with different countries when, for example, Trump, I think this was South Korea, he said when they had come back with an offer, it's not enough because those non tariff barriers still hadn't been addressed. The EU, for example, when the EU went to had that 0 for 0 offer, Trump said it was not enough. And so there was clearly there was clearly an effort to get more, by these really kind of wild numbers, unprecedented numbers, numbers that shocked the world. Again, we've covered that here in last couple of days. They should have shocked the world. They were meant to induce panic, and the panic was rational because those numbers were extreme. And there's an open question right now about whether this 90-day pause is actually a 90-day pause, or if it's an indefinite pause. What happens 90 days from now? Does Donald Trump go back to these tariff rates on the penguins, or is this something that is permanently ended? Is there something that goes through Congress? What does that look like? We actually still don't know, and I think that's a very important point. That global 10% rate is still in place, and the 145% tariff on China under normal circumstances, both of those things would be seen as, if we were only talking about each of those things, they would be massive stories in and of themselves. They still are, but because of the walk back on the second tier of the tariffs after the global 10%, there were these wild rates that we've been discussing. Since those have been taken away, it's almost like we're forgetting. Markets aren't, but it's almost as though the media chatter, it almost numbed us. And I wonder if there's some tactical explanation for that as well. Doing the two-step tariffs sort of softened the blow for the 10% rate, and then the really, really high tariffs on China. Kind of a legitimate question here. The S&P 500 is still down as of right now, about 6%, from where it was on April 2nd, since the tariff announcement, since Liberation Day. So that's still very significant. Again, as we are recording this on Thursday, stocks did fall. It gave some back. This is from CNBC of the historic rallies seen in the previous session after Trump announced his 90-day reprieve on some of his, quote, reciprocal tariffs. Investors worried that even with the short reprieve on some of the duties, economic activity will be slowed by Trump's singling out of China with higher rates. That singling out of China with higher rates was seen as a win by people in those protectionist circles who are now saying, look, and some people agree with this who disagree with the tactic. Look, this now forces the world to choose between the United States and China. And the unfortunate answer to that question for some countries, especially if you're thinking about Joe Weisenthal actually pointed this out in his Bloomberg pointed this out. If you're thinking about a country like Cambodia, Vietnam, he says obviously countries like Vietnam and Cambodia have gotten a lot of attention in part because they're huge sources of textile manufacturing for North American companies. Are they going to put up with a wall with their close, rapidly growing, and much bigger in terms of population neighbor China? Huge, outstanding question here, open question here, and we just don't have the answer to that right now. And I think that's where we get, did Donald Trump, to get back to this original question here, did Donald Trump blink, or is Donald Trump the winner of this exchange at the end of the day? I actually don't. I think that's an open question. I think there are a lot of people who are saying Trump blinked or Trump won. And I think until we know where some of these rates shake out, we're actually not going to know, because Weisenthal again pointed out that he has not seen evidence for this idea that 70 countries were like banging down the door for negotiations. He says, quote, I haven't seen any evidence that there's this big line of 70 countries banging down our door for negotiations. There's evidence that other parties were willing to negotiate. 70 countries banging down the door is different than the EU coming with offers. They've paused implementation of their counteroffer or of their reciprocal position, and there's a difference between that and then having 70 countries banging down the door begging for the United States to cooperate. Now, I think because Trump actually had a pretty good poker face in all of this, granted, given how surprised people like Weisenthal were. And I'll say it myself, I was surprised. This is kind of exactly what I expected to happen, just on a much shorter timescale. I thought Trump was willing to take a lot more pain in the market. It makes sense that he didn't elongate the process. I think that was probably a smarter move from his perspective. But I actually expected him to wait this out longer. And I think there may have been he was playing this probably very close internally. As we noted on the show the other day, Howard Lutnick and others had started talking about how these things can't be resolved in weeks and months, which indicated to me as an observer they were planning or they were setting people's expectations for a longer haul. And maybe that actually was the White House's plan. And from some of the reporting, it looks as though Donald Trump was swayed by Scott Bessent, by Jamie Dimon, and by the bond market. Trump basically came out and said that. I'm going to read more from Weisenthal here. He says, according to detailed reports from both the Times and the Journal, Trump decided to scale back his reciprocal tariff plans due to some combination of watching the yield on the 10-year Treasury soar, pressure from internal advisors to do a course correction, and then watching Jamie Dimon's appearance on Maria Bartiromo's show Wednesday morning. But you don't even have to believe the media reporting or anything like that. Yesterday afternoon, Trump said he had been watching the bond market and was noticing how afraid everyone was getting. He just said it out loud. Now, what's interesting is compare that to Trump's post itself. He said, based on the fact that more than 75 countries have called and been willing to discuss trade barriers, tariffs, currency manipulation, non-monetary tariffs, and that these countries have not retaliated in any way, shape, or form. That's why he authorized this 90-day pause. And both things can be true, of course. Both he can have been getting queasy, as he said, by looking at the bond markets, and along with that said, okay, we have this evidence of negotiability. Maybe that's a George W. Bushism, but we have this evidence that we can of cooperation with these people we want to make deals with. And I'm looking at the markets right now, and it probably makes sense to reverse course because, as we talked on the show a couple of days ago, that one fake news tweet from the Walter Bloomberg account about the 90-day pause was enough to send the markets instantly soaring until people realized that's not actually what White House advisor Kevin Hassett said. That is an anecdote that will go in history books. How one person willfully, likely, misunderstood something that Kevin Hassett said on TV, and the markets suddenly were reacting to this idea that there was a 90-day pause because someone had tweeted it or posted it on X. That to Trump was probably a sign, and this is partially why I also expected him to hold out a little bit longer, that with a single post on Truth Social, he could erase most of the losses. And again, like I said, S&P 500, for example, still down 6% from the April 2nd level. And hey, that's worth noting because, and I'm sure some of that, is I'm sure. Let's just say that having this tariff rate on China is probably an explanation for that, and the uncertainty continues to be an explanation for that. And this brings us to our second question, which basically is a cost-benefit analysis. Remember, the question was, did this work or not? So, was this good or bad? Those are two different ways to think of it. So, did it work uh, by Trump's, let's say, intent? Did this fulfill his stated intention? And then on top of that, was it good or bad? That's a very different question, but I want to address both because I think you kind of have to address both in order to address whether or not it worked. People like Bill Ackman were very careful to criticize Trump within the context of agreeing that we needed some measure of overall trade rebalancing. So we saw that play out on X throughout the weekend, and as markets were scaring people like Bill Ackman and also normal people, some 56% of Americans, which is probably a low number, have investments. This is a number I actually pulled up the other day as I was looking for something precise. There's a lot of different numbers floating around out there, but I'm pulling this up right now as I think it's worth it. Um, it's about 56% of people overall, and that includes pensions and things like that. So 56% of people, it's true what Scott Bessent has been saying in recent days that most of the market is controlled, owned by people who have by very, very wealthy. That doesn't mean other people don't have anything. So this is what I'm referring to here is a survey, recent survey from the Congressional Research Service that found 54% of U.S. households, quote, had retirement account assets. And someone responded to me on X saying, well, that survey didn't include pensions, which are dependent on the stock market. If you look at a crunching of the numbers, this is by pensionrights.org, they found that the percentage of workers participating in a workplace retirement plan is 56, about 19% in a pension plan. So anyway, a lot of people outside of just Bill Ackman were queasy about the markets, and Jamie Dimon on Maria Bartiromo. It certainly was affecting people who are just average. It doesn't mean of average wealth. It doesn't mean that people of high wealth weren't disproportionately being affected and freaking out about it. That's absolutely the case, but it was obviously starting to affect like normal people who might vote for Trump. It was resulting in like the temporary layoffs from Stellantis, which is bleeding both in the media and in local communities that Republicans don't want to deal with. And it's obviously in substance people's lives and livelihoods and their little community ecosystems, which is something we saw shattered around the country by NAFTA, for example. So those were a lot of stuff was contributing, but Trump, I think. I mean, this would have been obvious without the fake news Walter Bloomberg tweet. But Trump kind of knew that he could restore some measure of that pretty quickly. And yet, with the cost benefit analysis, this is something we talked to Mark DePlacido about on the show the other day. Was there damage done over the last week since April, since, yeah, Liberation Day, since April 2nd, that you sort of can't be like toothpaste, can't be put back into the tube? Was there damage that will not come back, that, average Americans, that the dollar won't come back from? And, maybe that's good or bad, depending on where you are. Depending on where the Trump administration is, maybe that's good or bad. But I want to just zero in on this quote. Um, so this is from George Charavellos. He's the head of foreign exchange research at Deutsche Bank. He wrote in a note to clients before the reversal, quote, "We are witnessing a simultaneous collapse in the price of all U.S. assets, including equities, the dollar versus alternative reserve FX, and the bond market. We are entering uncharted territory in the global financial system." Uncharted territory in the global financial system. So Trump walking back that first tier of tariffs, or the second tier of tariffs, I should say, the penguin tariffs. Maybe that's the best shorthand for that those tariffs, the penguin tariffs. Trump walking that back. Does it actually take us out of uncharted territory in the global financial system? I think absolutely not. I don't think it does that at all. I think what's been caused as we sit here right now on Thursday is an like incredible level of uncertainty, and that may turn out in a way that is good for Donald Trump, and is good for the idea that we need to have rebalancing, that we need to get better deals out of certain countries, and that we need to push countries away from China. We need, for national security purposes, to reshore some of this manufacturing, shipbuilding, just one example, chips, just one example. So, in that sense, the jury is actually still very much out, I think, on whether this worked or didn't. If you're a hardcore free trader, it seems completely obvious. There's really no argument, and I'm not in that camp. But if you're a hardcore free trader, if you're a hardcore free trader and you're not in the camp that this was ever worth messing around with, that it was ever worth toying around with all of these different countries, especially allies. So you disagreed with the tactics and the substance. Then it's fairly obvious. This looks like a mess. It looks like, even if, as Scott Bessent said, this was all always part of the plan, that Trump, and how can that be compatible with the reporting and Trump's own stated words, as Weisenthal points out, that Trump could just, with the flick of his wrist and a Truth Social post, decide where you're getting rid of these tariffs. How can the penguin tariffs, that is, how can that be compatible? Well, I mean, Trump's plan could have always been, hypothetically, can't read the man's mind, but it could have always been that he lifts the penguin tariffs, and just when he feels there's sufficient negotiation, as he said in that post on True Social. So it could have been, I guess, technically always part of the plan that you lift the tariffs when you feel like there's been sufficient negotiation. They never, actually have significant effects, and that the market can just shoot right back up. Maybe, maybe. But if you're in the hardcore free trade camp, you would never think that that was a good idea. And so even if it worked out all according to Donald Trump's plan, you're still going to answer, if we're following the flow chart here, no, this didn't work and it was never good. But I think right now the reason that you're seeing so many competing claims, I mean, the biggest reason for that is how insanely, not even insanely, I mean, I would say terrifyingly convoluted the global financial system is, how fragile of an ecosystem it is, and how complicated of an ecosystem it is. So that's, of course, the biggest reason, but that's evergreen. But in addition to that, the reason that there's so many competing claims here is because there's so much evidence in each camp. And if you're in a free trade ideologue, you feel like your case is being made in real time very clearly. If you're a sort of ideological protectionist, which Trump is, you feel like your case is being made in real time because you can point to a couple of examples of onshoring. You can point to the EU, for example, coming to the table on this. You can point to different countries suggesting they're open to coming to the table on all of this. But I think people jumping into either camp right now, I'm not willing to declare a winner or a loser because I think we've yet to see the specifics of these deals. We've yet to see long term effects of this shock and uncertainty. And frankly, we've yet to see what comes out of the Trump administration, too. Just policies that we can't even predict might happen going forward. So, for that reason, I just think it's too early to say Trump won or Trump lost. It's from my perspective, if you're dealing with the question of whether this is good or bad, I think it's also still too early. Like I'm somebody who's pretty open-minded about protectionism. I think, especially for national security purposes, as COVID exposed, some of these supply chains desperately need to onshore and or nearshore. So even from that perspective, I think the jury is still out. We still don't have the answer for how these deals are going to look. How corporations, there was a Chamber of Commerce survey that came out a couple of days ago saying a lot of companies were going to stick with China. And at the same time, China was one of their biggest sources of uncertainty and risk. They saw China as one of their biggest sources of risk. So does that translate into some really good onshoring, nearshoring, and betting on the United States? Maybe. I just don't think we have clear enough evidence one way or the other right now. And so that's kind of where I'm coming down on all of this. If you want to write us, you can do that. You can get a premium subscription over at undercurrents.tv. We're filming a premium episode today, so you get in on that action. You can interact with us directly. Make sure you subscribe on YouTube. Make sure you subscribe wherever you get your podcasts. I'm excited to continue working through these incredibly thorny questions with our great audience here at Undercurrents. We're over 200 episodes in now, and just appreciate everyone's support. Appreciate you tuning in as we talk through some of the most difficult questions in public policy, in the media, in our lives and our culture today, without rushing to judgment in one direction or the other. Sometimes you can't, and I think this is one of those times. So thank you for tuning in, and we will be back here with more Undercurrents soon.